Greetings from the Kigali Global Dialogue in Kigali, Rwanda. I'm Nikhila Natarajan with ORF, and with me is Florian Kemmerich, Managing Partner, Bamboo Capital Partners, private equity enterprise with 6 funds and more than $370 million in assets under management, more or less. Florian, you say that your firm focuses on scalability potential. I'm reading off some notes about your business, and all this is underpinned by demographics, technology, untapped markets. When I read that, the first thing I thought is this has all the ingredients of successful businesses, and it takes sometimes years to build this. Considering we are sitting here in Kigali, and this entire dialogue is about India and Africa and the partnership, what does it mean in context? Tell us.
Yes, good question. So what has changed, we have been doing now for over 12 years private equity, where we invest in commercial companies benefiting the low-income population. So we're looking for companies to invest in which resolve access and affordability of goods and services for the rural population in emerging markets. And of course, particularly we are deeply invested in India, but also throughout Africa. And what in the past was much more difficult, because we do not only measure the financial returns, we are an impact investor, we measure also the environmental and the social returns. In the past it was much tougher, because these business models were not at a price point in accessibility of that population. So we have a grassroots approach. And that is where the role of technology changes everything, where we see there's a historical moment for that population, because technology resolves the price point and the access. So we have seen these tsunamis, technology tsunamis, like the cell phone tsunami, from 1%, hardline phones to 80, 90% today, and still growing. The second tsunami was then mobile money, and specifically in East Africa, it is well established and it has been a huge adoption rate. And the third part is now distributed energy, because these households, if you don't have energy, but they all have cell phones, but they cannot afford a smartphone, this is where the distributed energy is the next wave. And suddenly we are tapping into markets where the price point is reached, the access is reached, and technology is a game changer, leapfrogging basically entire sectors. And this is where we are no longer talking about impact investing from a social side, but really tapping into huge underserved markets. And even the specialists, the tech specialists, for example, they see that if you invest in a tech company, for example, here in Rwanda, is Smart Africa based, 25 African nations. If you invest in technology, you invest much less money than we do in the developed markets, and the adoption rate is much faster because you don't have incumbent technology. So that's back to your question, is where suddenly the activities we have, where we for-profit investments and we measure what happens on the ground, basically opens up these 3 possibilities.
You said 2 things that stuck with me: grassroots and impact. Impact investing is a buzzword too. Some people get it right, but it's hard. It's incredibly hard to raise funds for those kinds of businesses. And considering how gung-ho you are, tell us what's working.
I can only say it's hard. It's hard impact investing in the past, especially because it was niche market. So we were stuck between the philanthropists looking at us saying, yes, you say you do social, but you really disguised sharks. And the for-profit investors looking at you saying, you are more tree huggers. You say you do business, but it's more about the, at the end.
Exactly my point.
But all of that is proven to be different. You see the growth of impact investing is massive. You have even the big asset managers all going into. And you have mainly 3 factors. As we are in the 4th industrial revolution, the data revolution, number 1 is you have a migration from the wealth of the money from baby boomers to millennials. And millennials want to make a difference in the world, not just giving back. So therefore there is a trend and demand on the investment side for purpose and the meaningful investments. That also puts pressure on the non-for-profit side. The old models of philanthropy are changing because you wouldn't just give a donation believing that somebody will use it for a good purpose. You want to know today with data, what do you do with that money? And that puts, now it creates these models where the non-for-profit is entering also impact investing as the for-profit. And then in conjunction with technology, as said before, you are in a historical moment where you see popping up startups, tech startups all over in the world, where you have to adjust the capital you provide. It doesn't work. A venture capital model from Silicon Valley banking on 2 or 3 IPOs with a bag of investments does not work. So you have to adjust it. So back to your comment, yes, it is harder. It used to be much harder private equity actually, where you have locked in money compared to debt, because where the investor has a certain liquidity. But all of that with these blended finance funds we're managing now in partnerships with UNCDF, with IFAD, with the World Bank, with even an NGO like CARE, or specifically in the context here of Rwanda, with Smart Africa, where you have African governments seeding the first loss and therefore attracting and being catalytic to get private capital on top, and therefore being able to invest in seed stage, not only in the growth stage afterwards.
Florian, when you say we're at a historical moment, for me it's palpable. But I'd like you, for our audiences, for their benefit, think of the companies you've invested in. Give us one compelling example so that they can put a name and a context to what you're saying.
We have several examples, but maybe in the context of Rwanda.
Yes.
So we've invested in a company called Bbox. And Bbox basically is a company electrifying households, rural households, and actually also adding internet access. And this has not only from an energy point of view, but also the wealth creation because it's data driven. The performance of the solar home units, panels and batteries, like a Tesla, but really on bottom up. Then the performance of the workforce and the performance of the customer, which create a credit history. All of that is a transition where the household has more money, has energy, and therefore life quality goes up, but also has access to internet. And then suddenly these models or these technology companies work. So for example, today 7% of the population in Rwanda has access to electricity and internet thanks to those models. That's one of the possibilities. Initially, it was very difficult for the company to start when they started because there was no, the technology platform to drive. The digitalization was not possible. This has changed significantly now as the price point is there. But what you need is a GSM coverage and you need mobile money. That's then the next step. And that's one of these tangible moments. The company Bbox today has about 200,000 households connected. And they want to really scale it up into millions of households. And not just Rwanda, but throughout Africa in parallel now in about 12 different countries. We just did a joint venture in Togo, for example, is another example in the same model, where we go into smart villages. Again, you see that, I'm saying historically, because it's not just blah, blah, or wishful thinking, and the adoption rate is much faster, but it has its peculiarity because you can only do business in an African context in an African way. So it's not just necessarily you can plug and play from any other part of the world.
We know that you've been bringing out an impact report year after year. So, and there's some data that's available. But tell us, what are your latest results looking like? What does it say? How many jobs? How many countries? How many lives impacted?
As impact investor, and this is always the criticism, yes, we invest for profit, and it's measurable what the results financially is for the investor. But then the impact side is much more discussion. So we started over 12 years. My partner, Jean-Philippe, basically, he started even 20 years ago, another company, and still around. But basically, we're looking at data, valid, concrete data. And that data set we have developed over the years. We have our impact management system. And therefore, every year we publish an impact report that's publicly data available. And for example, it took us 10 years to have an impact, let's say roughly with $300 million. We've impacted about 100 million people, 30,000 jobs. And that's traceable. It's not just us saying because we are rated and ranked. And from one year to the other, 2017 to 18, just adding another year, we went from 97 million precisely to 152 in this one. So really excited. We're publishing actually tomorrow, doing the conference here, publicly our press release and the report with great figures, and of course all in line with the Sustainable Development Goals of the UN. But also now we are really featuring more the figure of female workers, because gender and gender lens and gender justice is a big topic. So therefore also this will be featured there. We were all excited about it. The numbers look really that we are able to scale. And our intention, of course, for the next 2 years is here to, the next 10 years is really to massively grow thanks to these digital models of technologies with concrete data. You can measure, and we have that real time. You didn't have that in the past. Yeah, and the scalability of these companies we invest in.
When you say so many lives have been impacted, and you talked about women, do you have a way to figure how many people have been affected and what the gender differences?
So we measure that.
You do?
Throughout our investments, yeah, absolutely. So in financial inclusion, which won the team, which was in the past, micro lending institutions to become regulated banks, and now it's much more fintech, because you can accelerate to bank unbanked people through technology fintech. And there we clearly look specifically, have always looked at, who received that money. And actually historically in rural areas, it was always better. There's data around that saying that if you invest in a woman, microfinance, 96% of that money benefits the family versus 36 on the men's side, because men might have some other ideas what to do with the money. That's just one of the data. Of course, this goes all along, whether it's access to energy, whether it's access to healthcare. We're really measuring these data points to see who looks at that. And of course, Rwanda is very famous for its high level of gender balance, I would say, rather than gender justice. Yeah, so it's an engagement, and the social position of a woman is in a very good or much better space compared to some other countries.
Last question, Florian. When you say you're invested in 30 plus countries, how much of the meat is in, let's say, Africa?
So we had waves. We started initially, and this is over a decade ago, with a lot of investments in Latin America, but more of microfinance and really massive scalability. And then we had some investments in Asia, but really more India because of the size of the country. And then Africa. But Africa was less microfinanced. It was also testing grounds, in other sectors along. So today we have pretty much a balanced, let's say, throughout the companies we've invested between the three hubs, we manage that through Bogota, Nairobi, and Singapore, where our investment team sits. But you see clearly that the trend today it's a very exciting trend in Africa, because the possibility to catch up is huge, and the technology is kicking in. But again, our aim is to be balanced. Our aim is to be global. And at the end, if you look at the rural person, they all have the same problem, whether they are in Myanmar, whether they are in Zimbabwe, or whether they are in Honduras. So therefore, this is, at the end, we have a laser focus on solutions around that population. But again, yes, there are waves where industry follows, there's waves where a market opportunity is, and this is for us as private investor, of course, very important to see who takes our stake over once the company is scaled.
Right, and so we look forward to seeing your report, and good luck to you. Florian Kemmerich, thank you so much.
My pleasure, Nikki.
Thank you.